All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia. I'm the founder and CEO of Gar Capital. It is September 13th, 2023, on a Wednesday, 9 a.m. Eastern Standard Time. Glad to be with you this morning. Choppy morning so far. We did have the CPI number, so let's go ahead and knock that out rather quickly. CPI number. Go ahead and get it here from the blog. Be a lot easier than searching. Okay. Here we go. Year over year, 3.7% on a headline basis on the inflationary reading, consumer price index. Forecast was 3.6%. Previous was 3.2%. Core year over year, actual 4.3%, meeting expectations. Core CPI month over month was slightly above expectations, 0.3. The forecast was 0.2. And the core CPI CPI month over month actual 0.6% to the forecast of 0.6%. Previous was 0.2, so that's triple, triple the month over month. So inflation basically has tripled from last month, and futures are flat. What are you going to do? We expected CPI to be rather elevated and meet expectations. I did a whole thing on it. I did some market thoughts on what I expect and the consensus. And met consensus. We know that crude oil is a big part of that. Demand for gasoline and everything else crude oil provides. We talked about that golden cross ad nauseum now. So now that the CPI number's out the way, that's one more catalyst that we don't have. And this is where we are, Flatsville. So what do I think about this right now? Really just, I think the market just doesn't know what to do with this information. It is elevated inflation, but month over month, year over year met expectations other than the headline. It looks like the bulls are holding on to the core. Hey, core is not too bad. Strip out auto and gas. We're good on inflation. And the bears are saying, you see, triple inflation in just a month. We better be tightening. So you're kind of getting those fighting. And I think that's where we are, kind of a stalemate at this moment. Granted, we had a nice push on Monday. We reversed those gains on Tuesday. And we are basically flat for the week on S&P 500 futures. That's where we are. Pretty crappy. Not much to do. We want some kind of movement one way or another. Remember, we were used to CPI giving us a nice spike, 1% day, 1.5% day, up or down, give us something to work with. CPI don't hit like it used to, guys. It gets to the point where the inflation, information just kind of gets to the back burner. When Powell speaks, yeah, that'll move the markets, but it's not like 2022. What's moving the markets now? It's really the dollar and yields. That's what you need to be watching for. So again, if bond yields are higher, again, that's going to put pressure on companies that want to borrow capital to expand. Small caps, mega cap techs, not so much. What hurts them is a heavier dollar because they do business overseas. When the dollar is cheaper, they make more money overseas since all their goods, well, for the most part, their goods are made here in terms of tech, mega cap tech. Some stuff, obviously iPhones and such. We had the iPhone unveiling yesterday. I believe that's made in Vietnam now. Some parts in China, some parts in Cupertino, California. So that's where we are this morning. Again, kind of a, neutral right now. I mean, we're back to levels from Sunday open. That's not exactly giving us a lot to work with. So we just have to be patient and we're just watching. Dow futures, again, down 9, was green for a second. NASDAQ futures, down about 15. Again, just all over the place, all over the map. S&P 500 futures are flat. Good old Flatsville. The dollar is flat. The VIX down 1.26%. If you guys watch the VIX, that's pretty flat-ish. Russell's green, and again, we know the Russell is more, high beta names, aggressive growth names, small oil companies, that sort of thing. And they're up quarter point. So Russell's not screaming the world's ending with this inflation tripling month over month. And again, on a headline basis. Treasury yields 4.288, yet the market is relatively flat. So we're getting a spike in yields. The market still doesn't seem to want to know what to do yet. And it's been that way really all month. Gold futures flat, 1934. Not a lot of fear. Gasoline futures down 0.52%, $2.71. Crude oil is up still. The dollar being down does help. I did open an XLE position. That was part of our weekend watch list. I have those open. Those were the 94s. Let's go and take a look at it so you guys can see it. Let's see. Yeah, I wrote XOM by mistake on the recap of the day. Here we go. Let's go and jump to the blog. And you can see this was on the 10th, which was, I believe, on Sunday. Yeah, on Sunday. XLE above 92.71. We're above it. The 94 strike call. So I'm in those. Yeah, and also Microsoft broke too. So again, I didn't feel it till we got above 338 and that reverse. So you could see here pulling back. Tough. Just yesterday, tech just got hit. Bouncing a little bit now, but we'll see what we get. And Shopify never broke below that I saw. I didn't get any alerts, but XLE I am in. Again, I put that weekend watch list for you guys every week on a Sunday or Saturday, just depending on when I do it. And again, it's there to give you some assistance. Even if you are just starting out, even if you're just demoing, write it down. See if it's working for you. Do you like this trade? Do you think it's a good setup? Those are the things that are going to help you out in the future. Silver futures down 0.5% this morning. We're looking at copper. That's green. Let's see, euro dollar. I talked about the euro dollar short that we had. We were flat ahead of CPI. I told everyone, again, if you just want some control, you want to take some risk off the table, just close it at flat. That's totally cool. I don't know if anyone did or didn't. Right now, it's at 107.47. If you're still holding, you're probably down like 10 pips. Not exactly the end of the world. It's still a downtrend on euro dollar. It's just that it's choppy. And boy, Forex isn't what it used to be. I'll tell you that much. When I used to trade it back in the day in 2014 to 2000, really I stopped in 2018. I really focused on options more. Again, broke below the trend line. And just for anyone who's interested in futures, Forex, options, commodities, trading, it really is the same kind of deal. It's price action. That's really it. It's price action. It's technicals. Yes, there's some fundamental analysis. I'm not going to say that there isn't, but I believe that if you can master the charting of one type of asset, you can do the others. Now, you may not master the others. That's fine, but at least you know what you're doing. Enough to that where you can profit. So again, in my opinion, the toughest one is options. So again, if you're an options trader, you're really going for the legendary mode in Halo. You know what I'm saying? The hardest one. In terms of ease, again, I equate ease with control. Again, if I have control, that's a little easier. When I'm my hands are tied, I can't do anything from until 9:30 to 4. That's a little more difficult to me. So I like futures. I like Forex. Again, options are still the ones I love, obviously, but it is a little more difficult just because of the time expiry. Futures expires, but it rolls over, and Forex doesn't expire. So again, it's all about finding what works for you. Many ways to skin a cat. You don't have to do it one way or another. You don't even have to do it our way if you don't like. The idea is to use the information, disseminate it, and figure it out how to implement it in your trading plan. I mean, we have individuals here on our YouTube that are not members, and that's totally cool. And there's members that are on our Instagram that don't say a word, that don't like anything, they just like looking. I'm pretty sure you've noticed on Instagram we don't get a ton of likes. I mean, I guess I'm not that entertaining, and that's totally cool. The idea is, even if it's a couple of people and they use this information in the right way and they make some money, to me that's worth way more than any like or any follow or any comment out there. The important thing is use this information to your advantage. You don't have to like anything. You don't have to subscribe to anything. Hell, you don't even have to like me personally. The idea is make money and win. That's all I want you guys to do. We talked about the euro dollar, dollar yen. That's up about 41 pips. 147.49. Pound dollar 124.79. That's down about 18. Again, we talked about kind of the sentiment out there, right? Bitcoin is up this morning. 26,265. Ethereum rather flat, 1597. Now futures are green. So there you go. Let's go to where Carlos was wrong. And this morning, a little early, since we usually do the recaps at the end of the week. But again, it's important to take a look and understand and learn our mistakes. Was this a mistake on our part? We broke below the 100. We're short to 143 in the money on the 8th. How terrible. And we got this bounce. This candle here on the daily is Morgan Stanley upgrading a competitor. That's really it. So I want to show you guys that headline just because I like to recap the pain of a bad trade because I don't want it to happen again. So yeah, don't be too hard on yourself, obviously. But again, it's important to look back and see what happened. What can we've done differently? Let's see. JPM was right on the 11th. How terrible. JP Morgan CEO warns of economic risk from quantitative tightening. I mean, the info was there. The info was there in terms of how terrible the world's, banks should come down and sort of thing. And it just takes one stupid upgrade. An analyst from Morgan Stanley. Oh, no, that's not it. That's a Tesla one. Let me see if I can find it. Shoot. See, JPM. I apologize, guys. I wish I had this ready. But this is so important. I really want to go over it. Let's see. JPM. I believe it was yesterday that they did it. Here we go. This is yesterday at 6 a.m. An analyst from Morgan Stanley. Now, I really want to go over this. This is super important. This is Monday. Monday, we were red on the stock. This yellow line was showing me the break point that we broke. We were in the money on Friday on our 143 puts. Chopsville, right? Monday, we're like, man, this is a dead cat bounce. We're going to fall. No problem, right? Let's go to 6 a.m. on a Tuesday. Oh, 6 a.m. doesn't even show on the hourly here, I guess. But right here, we started popping. Right at 9 a.m. Because at 6 a.m., no control, options, remember. An analyst from Morgan Stanley maintained JP Morgan at overweight with a price target of 179 from the target of 173. And thank you, Morgan Stanley, for taking me out of this trade. That's headline risk. I know we've gone over it a lot, but it's very important to have context on why things happen. Should we be upset about it? Yeah, it doesn't feel good. I'll give you that. Is the world over? No. Should we close at the open? I want to see if we get a pullback here. Again, the market is still chopping. If we get some kind of pullback, maybe we get a shot. We don't know if it's going to be a meltdown or not. I mean, the freaking option's down 90%, which is absolutely awful. We had a 9-win trading streak growing. That probably might have killed that streak. So we just have to start a new one if that's the case. And I hope we do. Let's get to the questions. I really wanted to go over JPM. I'm sorry. Good morning, everybody. Christian is asking, good morning, Carlos. I've noticed Warren Buffett has invested in real estate recently. Really? I didn't read that. Thoughts on realty income as a long-term investment? Thank you for the morning note. You're welcome. When it comes to real estate, there is so many ways and so many pieces of advice out there from individuals who are more educated than I. I am a homeowner. I am also a property owner in Colombia. So I can understand how real estate, at least in terms of the time put into it, can be a little consuming. Now, the property over there is just family. It's not in Colombia, so I don't rent it out to anybody. In my home, I definitely don't rent out to anybody. The point is real estate a good asset to own? Yeah, I think property is great to own. I just don't want to deal with tenants and have to fix things. You can have a property manager. People like multifamilies. People like doing the short-term rentals, Airbnbs. I have friends of mine that own Airbnbs overseas. Totally cool. Do I think real estate is a good investment? Yes. There's REITs out there. Like Fundrise is a great REIT you can use. They've come down, obviously. Real estate in general, again, the asset price has gone higher. It's just that you're not going to get a lot of buyers right now when there's no inventory right now. So again, it is a seller's market, kind of. Prices are still elevated, but it's definitely not a buyer's market. So we'll say a seller's market, but not a lot of people are buying. So it's kind of in a neutral. Rates are too high to go ahead and buy new property, and prices are too high. Well, depends on the view, depends on the area, too high to buy. And for sellers, remember, if you are selling property and you own your property and you live there, selling here, I mean, you can, and you can take that money and buy another place. But unless you're downgrading, it's going to be very difficult because then you have to get a mortgage to get the other property, and rates are very, very elevated, as we know. So no, I don't think it's a bad investment. I don't think Warren Buffett is doing anything wrong. I don't know if it's commercial real estate. Commercial real estate, I'm not as interested in. I like residential. People need a place to live, right? Just depends on the area, I guess. Depends on the market you're looking for. If you're just looking for the realty income, that's fine. The only thing you have to worry about with those names, those REITs, is defaults. And right now we don't see anything telling us that, default rates are rising or foreclosures are rising. But that's the risk. That's really it. If rates start coming down, betting on real estate now is not a bad bet. But if we stay elevated in interest rates, I don't think you're going to get much out of it other than the dividend, and that's it. And again, I keep saying, if you just guys want a nice healthy dividend, 4%, 4.5%, hell, Robinhood's paying 4.9% on their brokerage money. I mean, for not doing a thing, not lifting a finger, and just waiting stuff out, I don't think that's a terrible proposition at all. I think that's actually pretty prudent. But again, if you're someone, Christian, that is looking to buy a property versus buying a REIT, obviously the REIT gives you more liquidity, a little more control. You can always get out. Buying a property, there's closing costs. You need an agent. You need to go inspect. All that stuff is so much moving parts. Very difficult to kind of just pick and choose what's best for you. It's a personal question to yourself on what works for you. I like things kind of a little bit hands off, except for trading, especially with investing. You just kind of leave it alone. Just don't touch it. Don't look at it. Just leave it alone, and you'll be fine. And for the most part, trading takes all my time. So being one of those landlords that have tenants would be a little difficult for me, since I put all my focus here on Guard Capital. This is pretty much everything to me. I love it. Thoughts on J&J? J&J AAA rated in terms of their debt. So why do I say that? Because it's very stable, quote unquote. And stable means boring. Let's call it for what it is. Johnson & Johnson is not going to go anywhere. Probably ever. Are you going to get rich off Johnson & Johnson? Depends how much you got in there. Look at this. We were 3 years ago on the weekly. We started at 145. We're at 163. You gained about $20 per share in about 3 years. Very much underperforming, but what do you expect? This is a consumer staple. This is a Coca-Cola. This is a Procter & Gamble. Those are the kind of names that, give you the dividend. They're boring. They're not going to go out of business. While you have the other side of the spectrum, the super aggressive, who knows, roll the dice, Carvana type stocks, the memes. So it's all about what you like. Is J&J worth buying individual? No. You could just buy the S&P and it has J&J. So, is J&J important? Yeah, in the grand scheme of things. But would I go out and buy J&J today? No. I just don't see any kind of, why would I want to get into that name? There's also headline risk with the talc and lawsuits. Man, it's a mess. And I think if you just own an index fund, you already have J&J and you're not beholden to that one name that doesn't do anything in about 3 years, really affecting your portfolio. Will Ford ever come back from the grave? Of course it will. Again, another name that we look at. Again, this is consumer. This is not consumer staples. This is consumer discretionary. You don't need to buy a Ford car to live. This isn't buying deodorant, cereal, milk sort of thing. So you kind of have to have that. Again, if you're buying Ford, you're thinking that the consumer is still strong and they want to buy cars. The problem is, we know EV is the future. Gas cars, yeah. I mean, who knows in a couple of years, maybe 10, 20 years, those gas cars will be considered collectibles. And then everything's going to be EV. And Ford loses money on their EVs. Why buy a Ford when you can buy Tesla? Tesla's more expensive, we know. But again, they're still the one that's growing. Has Ford grown in EVs? No, not really. They're trying to make a dent on Tesla, but I'd rather own Tesla, in my opinion. I think Ford is just, it's not niche enough to have a cult following other than the F-150. And the F-150 Lightning hasn't been really recepted by everybody. The Mach 3, I think that's the Mustang one, the EV, that's been doing very well. But again, Ford loses money on that. So if they really just kind of shift the production to EV fully, and then you have the unions, that's a little different. The UAW, United Auto Works, they're fighting GM for raised wages. That's going to put some pressure on the stock. Remember what that happened with UPS when they actually had their deal. So it's not an indictment that the company is bad. It's just that right now it is not attractive here. It just really isn't. There's a lot of headwinds that are against the name. Doesn't mean that Ford's a bad company. But again, we're just going to focus on the stock. Looking at the stock, I mean, you got to get above 13 if we really want to talk about this gap fill at 15. That's really it. But below the 200, not the best. Not the best. And that 20 DMA sliced below that 200. That's not a great sign either. I'd expect a little more pressure on Ford moving forward. Thoughts on UPS 52-week lows? And again, this is the UAW, the union announcement of the deal since then here. And that could be overdone. And really the issue is just the costs, the employee costs, benefits, so on and so forth. 155, that's this is the 2022 lows. We tested it. If you want a bottom feed on UPS, this would probably be the level to do it. Is it super interesting that I have to get in right now? I mean, another consumer discretionary too. Again, if you're thinking that we're gonna have a recession or a slowdown, UPS is not gonna do that well. Most packages now, again, FedEx, UPS fighting each other, but a lot of people order on Amazon too. I think I'd rather have an Amazon that's also a logistic company, but is backed by, they also have their cloud, they also have the retail store. UPS is only logistics. So if you're looking just for a company that does logistics but also offers cloud, offers their store, I would say Amazon's a better play than UPS long term. Of course it is. UPS, man, I think looking at it, it looks like it's ready for a buy. But boy, it can get to 125 to 130 really quickly too. Man, it's just hanging out there. You don't have to be the first one to buy on UPS. Let's see if we get a little bit of a pop. Remember when Tesla was at 220, then 208, and then we don't know what's going to happen, and then it started moving higher. UPS should be on the board. It should be in our purview in terms of a bounce play, but we don't have to be the first one in the gate. So we'll keep that. We'll keep that on the watch list, obviously, if we get anything. But to run out and buy, tough. I would say no. Not right now, anyways. Let's see. 4% dividend yield. Again, for us, I have no problem with a 4% yield. But I submit to you, you can go to an online savings. Get that 4%, you don't have to worry about the stock movement. And you're good. You don't have to think about it anymore. But if you're willing to take a stab at it, you're right at the spot to get it. But again, you have the downside risks around 125, 130, and that would suck, obviously, for UPS shareholders. It's not going to go to zero. It's just right now it's not an attractive stock after the labor agreement because that's more cost on the company. So you're not going to get a lot of people that are in demand yet. And again, we want to buy a stock that's going to be in demand long term, right? We want something that's going to grow. And if we're trading, we want something that's in demand, up or down. Thoughts on Microsoft and SoFi? Microsoft, again, we had the alert and then we had the pullback in tech. So again, I'm still holding some calls here, the 340s, and still an upward trend. I mean, I don't think it's over. It just sucked that we got that pullback. We are below the 50. We closed near the 50. So again, we need to see if that's going to be our pivot point for a bounce back. And right now it's just chop. So we need to see if that dollar does pull back for us and give us a little bit of a tailwind to see if tech gets a little bit of a bounce. If we're looking at the dollar on the daily, let's see it. We need to get to 104.03 and break it. So I'm going to learn at 104.20. That's what we're looking for. 105, tough nut to crack. That might be it if we get some good news on the dollar. Again, you're near the March highs. You're near the January highs. It rejected. Could it be a triple top? I really don't believe in triple tops personally. We should break. It is above that trend line too. So difficult to call here. Again, I do expect lower dollar towards the end of, towards as we go to the end of the year, obviously. But right now, I just stay below 105. If that can stay below 105, tech is going to be better because that's going to help mega cap tech, who does a lot of business overseas. And a strong dollar is not a good thing for multinationals. A strong dollar is good for those tourists that want to do business overseas, buy property overseas, or want to go shopping overseas. So, like for example, when I go to Colombia and I believe the peso was at 5,100 at 1.5 thousand. Oh man, everything was so cheap because you have dollars, and that's the benefit of it. All right, guys, we'll go and leave it there. Again, kind of recapping that JPM trade, tough. We're gonna have to make that back. Just sucks about that headline. No excuses though. We have to eat it, eat our vegetables. See if we get Microsoft moving forward. XLE is green this morning. We'll see if we can get that today and start a new streak. Keep it pushing, keep it moving. Nothing changes. Back to good habits, back to watching, back to researching. Let's rock and roll. Thanks for joining me this morning. Again, my name is Carlos Garcia. I'm the founder and CEO of Agar Capital. Thanks again for spending the time with me. We'll see you guys tomorrow. Cheers.